Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GUMING interim report. GUMING Holdings Limited offers a diverse range of businesses and services, including franchised tea-store retail network under the GUMING brand, company-operated stores trading in ingredients and related products for beverages, sales of beverage equipment, warehousing and logistics management, research and development activities, information technology development, supply chain services. The skyrocketing stock price of GUMING Holdings. A year of unprecedented growth. GUMING Holdings stock price has surged an astonishing 121% since its IPO in February 2025, reaching a high of $22.02 as of September 19, 2025. Several key factors have contributed to this remarkable growth. Firstly, the company's earnings have skyrocketed by 104.9% over the past year, with a significant increase in profit attributable to owners for 2024 and an impressive half-year profit for 2025. Investment banks have also shown confidence in GUMING, with Macquarie initiating coverage with an outperform rating and a price target of $24. Analysts' consensus EPS estimates have increased by 22%, further boosting investor optimism. Insider buying has also played a role, with founder Yunan Wang purchasing $12 million worth of shares at approximately $15.58 per share. Looking ahead, GUMING is forecast to continue its growth trajectory, with earnings and revenue expected to increase by 9.3% and 17.8% per annum, respectively. The company's strong financial performance, optimistic analyst coverage, and future growth projections have all contributed to the significant surge in its stock price over the past year. Net income and profit margins have shown a significant increase over the past few years. Net income has risen by 41%, followed by a 42.4% increase from 2024 to 2025, and a 49% increase for the 6 months ended June 30, 2025 compared to the same period in 2024. Profit margins have remained consistent with the increase in net income and total revenue, with a potential improvement due to optimization efforts. The adjusted core profit margin has increased by 1.1 percentage points from 19% to 20.1%. These changes indicate a positive trend in the company's financial performance. The company is generating a significant amount of positive operating cash flow. In 2023, it reported Rm 1,340.1 million in operating cash flow. Looking ahead, projections indicate that this trend will continue, with estimated operating cash flows of Rm 1,504,352 in 2025 and Rm 738,750 in 2024. Additionally, the net change in operating cash flow is inferred to be positive due to the acquisition of assets, further supporting the company's ability to generate strong operating cash flow. The company's debt level has experienced significant fluctuations. Initially, it decreased by 33% from Rm 0.244 billion to Rm 833.4 million. However, this trend was reversed as the debt level increased significantly to Rm 32.574 billion on page 21. Furthermore, interest-bearing bank and other borrowings skyrocketed from 0 to Rm 0.487 billion. The increase in debt level likely led to a rise in interest expenses, although specific figures for interest expenses are not provided until page 57, where it is noted that interest paid decreased from 644 RMB 0 to 17,166 RMB 0. Management is emphasizing a multifaceted approach to drive growth and solidify the company's position in the industry. Key strategies include expanding store networks, particularly in target provinces, while also investing in technology, product research and development, and branding efforts. The company aims to fund future capital expenditures using its existing cash balance, with flexibility to reallocate funds as needed. The company has a history of paying dividends, with notable instances including payment of Rm 0.74 billion in January 2025, an additional payment of Rm 0.87 billion as of June 30, 2025 further, an additional Rm 0.87 billion to be settled by March 2026. There is no mention of share buybacks in the provided information. Concerns about inventory buildup exist. The financial summary reveals that there are indeed concerns regarding inventory buildup. Specifically, on page 19, it is noted that a decrease in finished goods inventory occurred, which may be seen as a positive trend. However, this decrease is not necessarily indicative of an issue with inventory buildup. A more pressing concern arises from page 74, where it is stated that both raw materials and finished goods inventory increased from 2024 to 2025. This increase suggests that the company's inventory levels are growing, which could potentially lead to issues such as storage capacity constraints or reduced cash flow due to tied-up capital in inventory. Overall, while there may be some nuance to the data on page 19, the clear indication of increasing inventory levels on page 74 warrants further investigation and consideration. That concludes the financial summary for GUMING. Feel free to comment below, and I will be happy to answer them when possible.